Businesses across the UK are waking up to electrifying their fleets. In this episode, we explore why employers and employees alike might benefit from driving electric. If you're baffled by phrases like benefit in kind or confused by salary sacrifice, let us help you understand. We're fortunate to be joined by specialist fleet consultant Caroline Sandall-Mansergh from LeasePlan. So there's lots of benefits to switching to electric vehicles, and with recent changes in taxation, it becomes especially compelling. But can you explain to us, Caroline, where we are right now?
Well, it's a big question, Robert, deserves a big answer, and over today's conversation we'll go through that in more detail. But if we think about what government is doing now and what previous governments have done to really incentivise the take-up of electric vehicles, for example, company car tax or CCT started off at 0% for electric vehicles, and it's still now only 1%. It will rise to 2%, but we're talking about really, really low levels of taxation. If we also think about VED, vehicle excise duty, the changes that came in 2017. So for zero emission vehicles, they pay no VED to start off with. And if they're under £40,000 in list price, then they pay nothing for subsequent years. If they're over 40,000 in terms of list price, then they still pay a vastly reduced amount of £335 a year. So still really, really low. If you think about some of the other changes that government have made, there's a thing called OPRA, so optional remuneration. It's difficult to get your teeth in for that one. That changed fundamentally the way that salary sacrifice works. So ultra low emission vehicles are exempt from those rules, so they remain really competitive under those sorts of arrangements. Now, turning to some of the other elements of non-pure tax related, if you think about grants. So of course there are still grants available when you're purchasing a vehicle. So if you purchase a vehicle under a list price of £35,000, you get a grant of up to £2,500. So there are still a number of vehicles that fall into that category: e-Golf, Leaf, BMW i3 and so on. Now, if you think about the other form of grants under the home charging system, so you still have grants available if you take a charge point at home. Now that is up to 75% of the charge point, up to a cap of £350. Similarly, for workplace charging, for the first 40 charge points that you have, you get vouchers of £350. So there are still grants available at home and at work. Now, we've also seen the CO2 and the actual percentage in terms of the BIK and the company car tax change. So that went down, as I mentioned earlier, and it remains really low. In addition to that, you've got writing down allowances. So for a business, that becomes really important. You've got that threshold of 50 grams of CO2. So above and below that, you see differentiation for writing down allowances. If they're below, you get the main rate of 18%. If they're above, you get the subsequent rate of 6%. So what does that all mean? If you choose cars that are above 50 grams, then they are more expensive to lease. So that's great news for electric vehicles, not quite so good news for some plug-ins and for diesel and petrol. So it's really important for fleets that you have a plan to commence that transition across to electric vehicles and take advantage of those tax advantages that are available. So if you think about all of these things wrapped together, it's quite a lot to get your head around. What we do on an annual basis is we publish a funding and taxation guide with Deloitte. It has all of that detail in there. So if you want to be a bit nerdy, a bit like me, then you can go and have a look and read through all of that.
So what else do we need to consider?
Well, Robert, we've spoken mostly about tax issues so far, but it's important to consider the cost of electricity as a fuel for the vehicle. What we're noticing, when used as a fuel, it's 2 to 4 times cheaper than the equivalent fossil-fueled vehicle, which is a substantial saving for drivers. You also need to think about other items such as servicing and maintenance. So within an electric vehicle, you have considerably fewer moving parts. So to service and maintain it over a period of time is considerably cheaper. Also think about when you're out and about moving around, particularly into more urban environments, clean air zone charges are coming into play. whilst you've got an electric vehicle, a lot of those charges will not apply and probably won't apply for some years to come. So if you're using those sorts of routes, that's another opportunity to save money. And more than all of that, it's better for the planet, it's better for our health, it's better for our lungs.
And what should we be looking at going forward?
Well, yet another big question and another big answer, I'm afraid. The thing that we need to think about now is the fact that what's going to happen when more and more people drive electric cars. So there's a future problem brewing. Everything at the moment is about incentivisation of that transition into electric vehicles. That can't continue forever. The plug-in car grant is still available. We know that it's going to be available for the next couple of years, but we can reasonably expect some changes to happen there as a starting point. Future revenues from VED are going to fundamentally change. So you think I mentioned earlier around electric vehicles not paying any VID or paying a much lower level of VED. VED is used to fund roads. So as that revenue drops, something will need to change. Electric vehicles have a considerable advantage at the moment. In future, that will become somewhat unfair that they are using the roads as much as everybody else, but not contributing as much in terms of VED. So we can expect that to change. We can expect some tax hikes to come in future years. We know that government is consulting in a number of different areas, particularly around company car tax and VED for vans. But the big one that we really need to think about is road user pricing. So that's where we all pay a sum of money to use the roads. That's moving away from just that VED related cost to a more widespread pay-as-you-go related cost. The money that government currently get from fuel duty is substantial. It's enormous, and there is a growing black hole there. So we can reasonably expect road user pricing to come into play, and that's one of the big consultations that will be coming our way in the coming months. All these sort of bad sounding things, this isn't, and I stress it is not a reason to not go to EV. EV is the future. It's more a case of when you want to jump. We need to think about 2030 coming, and that's not really all that far away. So we need to think about how quickly fleets can transition. And the important message is to commence that planning now and to really look forward to the point at which fleets can go net zero.
So Caroline, benefit in kind. Now, I've had this explained to me before, and while I'm hearing it, it's a bit like the offside rule. I can understand it when I'm hearing it, and then later I can't. It is a complicated thing to understand. Can you enlighten me on benefit in kind?
It's complicated and there's lots of acronyms.
Yeah.
So benefit in kind, or BIC, or BIK, or CCT, company car tax. All of these things mean the same.
Yeah.
So if you think about it as it's a CO2 weighted percentage of the list price of the vehicle. So You're taking that CO2 value, it corresponds to a percentage in a tax table, and then you apply that to the vehicle's list price. And then according to your income tax rate, that determines ultimately how much you actually pay.
Right.
So we have new bands of BIC, company car tax, CCT, and those happened, and the main incentive of those was to target the really low, the ultra low emission vehicles. The important number, again, as we mentioned before, being 50 grams of CO2 per kilometre. Below that, you see significant reductions in the amount of tax that you're going to pay. So those rates will increase by a single percentage point, but we do have certainty of those rates going up to April 2025.
Right.
So those rates have been frozen from tax year 22-23, but we know that what they will be in the following tax year. So we've got that period of certainty from government now, which is a good thing. So if we think about what that means in terms of some examples, so a zero emission vehicle in this current tax year will pay 1%. So it's a fairly small number.
Very small, yeah.
And emissions of 50 grams per kilometre or less will pay, if they're, say, got between 40 and 69 electric miles. So that's 50 grams of CO2, 40 to 69 electric miles. They'll pay around 5%. So more than zero emission, but still quite low.
And that's like a plug-in hybrid.
Like a plug-in hybrid, yeah. However, If you think about, say, a normal petrol or diesel powered vehicle, you see much greater differences. So if we look at one that was, say, between 100 and 104 CO2, they pay 24%.
Right, wow.
So there's an enormous difference between what might have historically been deemed a low, ultra low emission vehicle at, only 100, but actually with the current tax tables, you really need to be going down below 50 grams per kilometre to see, those really lower rates of company car tax.
So the other common phrase I hear, and I also need an explanation for, is salary sacrifice. Can you explain that to me?
So in simple terms, Robert, if you think of the words salary sacrifice, it's where you are foregoing an element of your salary in order to receive a non-cash benefit, or in this example, a car.
Like a company car then, if you'll get a company
effectively,
car.
Effectively, it is a company car. And by doing so, you're reducing your tax and NI because you are sacrificing from gross salary. So therefore, there are tax and NI benefits. And those benefits are for the employer and for the employee through lower tax and NI. Any car attained through salary sacrifice, as we said, is effectively a company car. So you get all of those benefits of having a company car, of it being, less hassle. You're effectively just taking a car over a set period. And it's as simple as that.
Okay, so I understand that, but then are there specific advantages if you can get salary sacrifice and have an electric vehicle? Is there an extra advantage with that?
Well, if you think we've just explained with under salary sacrifice, taking a car, it is a company car, therefore you are paying benefit in kind or company car tax. We know that for electric vehicles, that benefit in kind rate is really, really low. So taking it under salary sacrifice, not only are you taking advantage of those tax and NI savings through a gross salary deduction, you're paying very, very low benefit in kind rates as well. So double whammy.
So Caroline, what does this mean for fleets then?
Well, I think if we consider everything that we've talked about today, so it's low rates of BIK for drivers, so they're paying less tax. They're attractive vehicles. The charging network is there. It's almost what's holding you back from transitioning. We know from a whole life cost perspective as well that for fleets, if you're managing a number of company cars, there are savings. So that historical difference in terms of running costs between diesel and petrol and electric, then they're now getting to be pretty much on par. And for some fleets, there will be savings to be made. So there are benefits for drivers, there are benefits for fleets, and if you haven't started that transition, get your plan in place now.
Right. And then what about the self-employed? Because there's a lot of, I am self-employed, there's a lot of us around.
Well, obviously it is different if you're self-employed, and it can be more complex. I think it depends on what you currently do at the moment. So you might have a director's loan to have a car, you might have a vehicle as a company asset in a small business. So really the best thing to do is to probably take this video and show your accountant and just explore what changes you could make, because there are some differences that you need to be considerate of.
Do I consider myself an EV pioneer? No, I've never really have. It's just one of those things that's been embryonic. In the whole 15 years I've been in this career, it's just the next thing that I've done, the next stage in evolution, the next piece that's just come along and get on with it. I think the biggest difference EVs have made to me is getting that message across. It's normalising things, it's that whole clean air quality piece, it's just how it makes you feel and that positivity that comes with it as well. The biggest difference EVs have made to me is they've given me purpose. They've given me something to help. I feel like I can make a difference now and make a change. The financials really stack up. When you look at an EV and you take the whole life cost of everything, even from a personal point of view or a corporate point of view, EVs absolutely stack up right now, and they will do really easily for the next few years. It's a no-brainer to take an EV, especially if you're a company car driver. There aren't as many problems with the public network as people believe. There's actually a lot out there, and it's an iterative process. You have to remember that it's that supply and demand. If we'd got too many public chargers out there and no EVs on it, everybody would be complaining that there's too many charge points. As we get more EVs, then they'll build more charging points. I think the issue that people perceive is they haven't actually used them enough themselves. They don't know where they are. They haven't necessarily figured out how to find them. And actually, they just might not be in their area, but it's just looking around. And you'll find more and more people are willing to help you as well. The grid can actually cope with all these EVs. In fact, there's a whole change in all this going forward. And the grid keeps evolving. It always has evolved and it will keep evolving as we go forward. So we need to pause for a little bit on EVs and how National Grid are helping to solve the energy crisis above, because EVs are actually just a small part in the whole journey, because you've got heat. To get to this whole net zero thing, you've got all the heat side of it, you've got the other carbon, you've got the other transport decarbonisation thing. So the grid needs to be twice the size, and we need 4 times the amount of renewables in it. So this transition is happening, we're putting things in place, and we have to go forward. But actually, when it comes to whether the grid can cope for EVs or not, it's actually just a tiny fraction of everything that the grid is actually trying to put in place for the whole net zero environment that we're now in. So driver engagement is key. You need to get your buy-in from your drivers. And some of that comes through education, some of that comes through pure fiscal actually. It's actually cheaper on a company car for them to use. When it comes to your commercial drivers though, these are tools for the job, so you need to encourage them to do it. And one of the ways of doing that is getting them in the vehicle in the first place. So get some of those advocates, get them in the vehicle, get them driving it. There is nothing better than when you've got peers telling you how great those vehicles are. And I haven't had a driver yet that's gone in one and said, I don't like it. So the financials right now make absolute sense for anyone going into company cars. That's from a corporate point of view because of all the national class 1 insurances that you're saving. And from a personal point of view, the BIK is so much in anybody's favour right now that it really is worth getting into an EV. And that's without talking about the fuel costs and savings.
Thank you, Lorna. I mean, that was really interesting. So, Caroline, where can people go to find out more about taxation and leasing electric vehicles?
Yep, on our website, in the Insights section, there's a wealth of articles about the topics that we discussed today, but everything to do with leasing and vehicles, including the tax and funding guide that we do annually with Deloitte.
That's all from us for this episode and indeed the series. So I'd like to say a huge thank you to Caroline and all the team at LeasePlan who've helped create these episodes, our fantastic guests who've shared their personal insights on EV ownership, and of course you, our amazing audience. We hope you've enjoyed the series. And as always, if you have been, thank you for watching.